month. And sadly, since we last spoke, a lot's gone on in the world. What's been your take on the last month or so?
Yeah, that's right, Rob. Look, there's two or three things that have happened in the world that's kind of interesting. One is that people, from a financial market perspective, will see that sadly both equity and bond markets generally struggled in October. However, as we've already seen just a couple of days or so into November, we started to see a recovery occurring. So, as always, financial markets go up, down, around and about. What's that law that I think the chance of the market going up on a single day is 50.5%, and the chance of it going down is 49.5%. But over time, as your time scale pushes out, the chance that the markets go up is still rather good. And that's always the place to be for any medium-term investor. Elsewhere in the world, of course, obviously, there's been some tragic, very unfortunate issues, geopolitical matters in the world, in sadly more than one place in the world, and consequently that always concerns financial markets. Unsurprisingly, you've seen areas such as gold and oil and gas prices generally go up over the last few weeks. But I'm hoping that actually some common sense will prevail as to sort of the deeper global impact on all of this beyond clearly some great uncertainty in some certain areas around the world. All I do observe is that the world remains a place which is still generally growing, where the corporate earnings season has been okay, and that many companies, it's funny looking at the comments from Sainsbury's, for example, yesterday, a company well known to many of us, doing actually rather well. Maybe that's because they're charging all of us quite a lot of high food prices and the like. But my general observation would be that there are plenty of companies out there that are still making okay progress, reflecting a world that is still growing. And whilst we'll have this geopolitical uncertainty, still some feeling that interest rates are much higher than what people have been used to for much of the last 10 or 15 years, we've also seen central banks of the world, ECB, European Central Bank last week, over the last few days, the Federal Reserve in America, and the Bank of England in this country have decided to hold their interest rates. It's something you and I have talked about before. We've kind of been anticipating this for a few months now, but finally they have done that. And it tells me that they're aware that if they keep tightening policy, that will have an impact ultimately on how they're impacting their local and regional economies. So I think you put it all together, it's an okay backdrop still. It's not an easy backdrop, but I still come down to my ultimate conclusion that it's much better to be an investor than to have all your money under the bed or something like that. It's always good to be an investor. You just got to accept the fact that not all the time everything goes up. Frankly, if it did, I would worry more than be excited about that. The good news is I'm still optimistic about the rest of this year. Still being pleased with some of the opportunities that investments have shown during 2023, and still excited, frankly, about the prospects for 2024 and beyond for the decade.
Yeah, thanks, Chris. Just on that point then about interest rates. So we've had another signalling that maybe rate hikes certainly have been paused, and we're not at that stage where we're looking right now at further rates, but they keep stressing that they're constantly looking at the data, looking at jobs, looking at the wider economy. Do you think what we've seen over the last week or so then, with bond yields cooling off a little bit, equity markets getting a bit more confidence, could this be the start of a bit of more of a positive period for investments generally? Because I know historically speaking, no guarantee, but November, December, typically not bad months for the stock market compared to September, October, which tends to be historically bad months.
Yeah, that's absolutely right. I guess two things really. The first is that you're absolutely correct, Rob, that when interest rates stop going up, you tend then to get some anticipation of what's going to happen next. Now, ironically, sometimes it's the perception that there's an imminent recession, but I don't think that's the case this time, actually, despite some of the fears that you see amongst commentators and the like about these issues. I think more likely is that we'll move into 2024 with an acknowledgement that growth is not going to be fantastic. There's still going to be uncertainties out there, political, geopolitical, and related. But as I've said before, the companies of the world are still making progress. And I think when you sort of factor that into interest rates no longer going up, inflation being sort of another important composite of all of this, inflation clearly coming down and will come down clearly a lot further over upcoming months. There'll be an acknowledgement that if you're in a job, if you've got a pension fund, if you're doing all of those sensible things like paying your bills and related, you're going to be as well positioned as you can be for 2024 and beyond. And then when you think about that, how that reacts and impacts the average well-run company and ultimately then the average stock market or bond market, it provides opportunities. And I guess it's back to what we've talked about many times. You can never assume that every single investment, every single company, every single country will grow. That's never the case. What you see is that carefully chosen investments, allocations, countries, however you want to view it, that's going to be much more important. It is what I often call an active investment world. You've got to pick and choose carefully, or your advisor has to pick and choose carefully. That is so important, and much more important, I think, in the 2020s than we ever saw it in certain previous decades. We've seen it already, let's face it, in recent years. The uncertainties of COVID, geopolitical concerns, the rise of inflation, and related factors. As we sort of move through all of these issues, the importance, though, of choosing carefully an important and relevant investment portfolio for your allocation, for your pension fund and your other investment allocation is super, super important. And that's what really you've always got to do. And the thing is never to sort of walk away from investments, because as always, as we've seen before, the darkest hour is always before the dawn. And maybe we've seen some dark times earlier this year or in the last couple of years or so. But I'm really still optimistic about where I see the world shifting and moving towards as the 2020s move on. And it's not because everything's going to be in a marvelous situation. There's still going to be plenty of challenges out there, be it everything from aging populations, debt, global warming, geopolitical whatevers. But tell me a time when that wasn't, many of those issues weren't a backdrop, a reality for us out there. What I'm still excited about is I still see more people earning money, getting rich, still plenty of new jobs out there around the world. It's still an exciting backdrop from my perspective. So you're correct, Rob. There's uncertainty. We're moving towards a period of time where traditionally markets do better. What's going to be really important, though, is how people think about 2024. And hopefully it's much more than just who's going to win the elections in the UK and the US, and a bit more, how are people going to live with this brave world that we've got out there, this evolving, shifting world? How can they take advantage of that? How can they still get benefits from those moves and evolutions? And believe me, as always, the world gets better over time. I know it may not feel like that sometimes and quite often, quite regularly, but believe me, over time it does get better. And that's always the thing for any, I think, smart, thoughtful investor to always think about.
Brilliant. Thanks, Chris. And lastly then, just to wrap up things, you mentioned there about oil, and we've witnessed that, yeah, oil increased. It seems to come back down a little bit since things have gone on in the world. Do you think that we might see another energy crisis this winter that was on the cards last winter, but thankfully it didn't happen, and we had a milder winter which helped things, which, yeah, it's mad, isn't it? Years ago, the weather never really came into the investment world, but now it's a big deal. So as things look at the moment, are we okay, or is there a potential for things to escalate again this winter?
There's always been some scope for volatility in oil and gas prices, but we've learned a lot over the last 18 months, be it because of some silly conclusions from Mr. Putin in Russia and the response of how governments around the world have realized that energy awareness and range of different supplies is important. So we've improved on that regard. Do I think oil and gas prices could be volatile over the next few months? Of course, that's a traditional kind of view towards the winter period. And if there's some certain geopolitical issues too. What I would observe, though, is that people are better positioned. we're finding greater range of alternative energy sources out there, be it the rise of nuclear side, be it the rise of alternative wind power and related new forms of energy generation. So I think we're getting smarter in that regard. I think ultimately the problem for the oil industry in particular is that there isn't a shortage of supply medium term. What will change actually is demand, because the world is shifting towards a little bit more towards gas, but certainly much more towards alternative energy sources, green energy sources, if you like, much more progressively over the upcoming decade, perhaps more than people think. So from that perspective, I would say the oil and gas suppliers would be wise not actually to try to take advantage of any short-term issues, because actually just encourage other sources of power to be utilized over time. As always, you go back to the investment crisis of the early and mid 1970s, and actually the reaction was to drive the sort of the search towards alternative power sources more progressively over the 1980s and beyond. That is clearly happening already, and I think actually medium term we shouldn't really worry too much about what the oil price is, because I think will be factored on other areas and other sources. So I'm quite comfortable. You're right, short term, if we have a hard, heavy winter, if there's uncertainty, problems in supply related, could it have an issue? Yes. But we would have had a bigger problem last year because of the lack of sort of awareness we had then. This year, at least, we've got greater awareness, greater supplies, greater stuff already in storage. So I think it's going to be okay. That's my official view on it. We'll see whether it's correct or not in the upcoming future. But I remain an optimist, if you like, on being able to avoid super high oil and gas prices. I think actually we're moving more to the point where there'll be high demand for energy, but actually less need to take that from oil and gas sources.
Brilliant. Thanks, Chris. Thank you for that. And we will catch up again in a month's time to end off 2023, which has been a very interesting year, and I'm sure it's not done just yet. So thanks for your time, and we'll catch up next month.
Sounds good. No problem at all.